I've been in crypto since 2017. I've helped many people invest millions of dollars into Bitcoin. And recently, a manager of $1 million trust asked me for the best way to buy Bitcoin. And I realized it's 2024, and there are many ways to get this exposure. In fact, there are several ways that have returned up to 5 times as much as Bitcoin in the last year. And today, I'm going to give away for free the 5 winning strategies to buying Bitcoin to get that exposure to the explosive upside in 2025. Now, I'm going to be looking at historic returns, evaluating key risk, and giving you an honest take on the effort needed to be successful. And stick around to the very end because I'm going to give you 3 portfolio ideas. You can combine these strategies to grow your well-earned money with your level of risk and effort, including what I'm going to be doing for 2025. Now, you're going to want to grab a pen and paper because if that wasn't enough, I'm sharing with you a new asset class that's only available on Bitcoin and that may become your next 100x or even more. And believe me, this window of opportunity, while it's still here, it's not going to be around forever. Now, this video is organized around the 5 strategies where for each of them, I'll break down the risk, reward, and effort for each. Strategy number 1 is Bitcoin Spot. It shows how much your buy and hold strategy would have returned over the last 12 months. Strategy number 2 is MicroStrategy, one of the largest holders of Bitcoin and surprisingly, a much better buy than Bitcoin over the last year. Strategy number 3 are the Bitcoin miners, where I compare their returns to the challenge of choosing the best of the bunch. Number 4 is a little ETF called MSTU, which looks to double the returns of MicroStrategy, but with a much higher risk. And number 5 is the riskiest strategy of all with the greatest potential reward, and I'll reveal that later in this video. Let's get started by first understanding the risk, reward, effort trilemma. In each of these, present a different risk-reward profile that you need to be able to evaluate to understand where do I want to put my capital to work, how much more benefit am I trying to get from a Bitcoin perspective, and that's what we're going to be talking about today. And I think the framework is relatively simple, right? But I want everyone to kind of take a minute to think about it, right? You've got the reward. What is the outsized return that you're looking to get? We're going to use Bitcoin as the baseline, and we're going to compare those other assets against it to see how well they have performed against it, to see how much of an additional reward are you getting. But you got to be able to compare that to the risk. Each of those assets brings their own risk profile to the table. And so you need to be able to evaluate that and be comfortable with it, knowing what you're buying. And lastly, there's this element of time or effort. And the time and effort is really important because while many people will say, I'm really just going to look at the risk reward, you have to have the ability, the effort, and the time to actually be able to do the evaluations. And in many cases, for some of these assets, be able to manage the trade on a pretty frequent basis. And if you don't have that time, that's another risk you got to add in. You're really not going to be able to feel confident in what you're investing in. But we'll get into the rest of this. But when we get to the end of this video, I'm going to summarize this, kind of looking at each of these asset classes against each other, comparing the risk and the reward, as well as the effort, and give a couple of different portfolio views that you can kind of evaluate, think about in the context of your own investments. But let's start off with Bitcoin and just look at that from a price perspective to establish this baseline. And so as you'll see here through the rest of the presentation, I'm going to be talking about this timeline, which is November 11th, 2023 to November 11th, 2024. That's when I'm looking at sort of this rolling 12 view. I'm really doing it with those dates in mind where best I can. There's a couple of points where I'm not able to do that, but I'll try to highlight that point. But those dates are really just arbitrary. You're always going to have an issue with whatever dates you choose of cutting off maybe some downturns or maybe some upside, as we did here right before the big run up. But that's part of the analysis. And this just really gives us a baseline to say, how do these assets perform against each other over that time frame? So if we look at Bitcoin during that period, it really breaks into 3 separate periods, right? You've got the end of December or the end of 2023 that goes into March of 2024. And during that time, Bitcoin rose about 105%. That's also the time frame when the ETFs went live, and we'll get into that in a moment. That was followed by a consolidation period that went all the way from March through to September. And when you look at the dates, certainly Bitcoin went up and down. And like I said, it was a consolidation period. It basically did a double bottom first in August, then in September, coming down about 26% during that period. And since then, through the end of the period that they analyzed November 11th, it's up about 64%, and which gives you roughly about 143% return over that period. So if you just bought and didn't sell during that time, you get about 143% return. And that kind of establishes our baseline. The question is, are any of these other assets, are they going to perform better or worse to the baseline? So the first one we're going to be looking at here is the Bitcoin ETFs. Now, first, when I looked at the ETFs, I didn't even put them in the analysis. I was just grouping spot Bitcoin with ETFs, just assuming that the performance will look exactly the same. There's a little bit of nuances, and I want to just kind of highlight that. So what is the ETF? The ETF are vehicles that are being offered by sort of these large investment houses like BlackRock and Fidelity. And what it is, it's an investment vehicle where they sell shares of the fund, and then they use the proceeds of selling those shares to buy spot Bitcoin and then put it through a custody arrangement into a digital vault, if you will. Right. So there's no leverage that's used here. And really, if you think about that transaction I just mentioned, the price of the fund should really be related to the amount of Bitcoin that they hold on the balance sheet, right? That's in the fund. So it should trade relative to the price of Bitcoin, right? There shouldn't be a premium. There shouldn't really be a discount, minus any fees. Now, each of these are going to take various fees. That's been widely discussed that, Grayscale is offering outrageous fees. IBIT is obviously very cheap. And there's obviously several tickers here that have done that have offered this ETF this year, but it's been a bit of a game changer. As I mentioned, we've already seen 28 billion in inflow for this market, which is just amazing. So when we actually look at the comparison point of this, you can see on the chart here, these ETFs for the most part mimic it, right? Bitcoin goes up, it goes up a little bit higher, then it kind of drops down. And you can see the flow pattern here. It's basically the same. Now, if we look at the actual amounts on that full year basis, and just to say full year, the ETFs didn't launch until January 11th, 2023, so we had to shorten the time frame a little bit for them to really give a better picture. For the most part, the performance mirrors that of Bitcoin. Bitcoin over that period did about, I want to say a 90% return, and these are a little bit less. Now, you've got the fees associated with it. There can be a little bit of a delay in the purchasing of the Bitcoin, maybe how they're going to be repriced on the next day. So there's a little bit of a delay there, but for the most part, you're not really seeing a difference in the return. I do want to point out here, you do have Grayscale on the bottom here, which I'm not entirely sure if we've got a good explanation for why it's been so off. They've had the most amount of sell pressure. They're the only fund that's really experienced significant sell pressure this entire year. And so that could maybe explain why their returns look as low as they are. But I think it really has to do with the fact that they then broke into this other ETF that's on the very bottom. And because the scale here, this looks like it's underperforming, but this is their smaller ETF trust, which has a lower fee arrangement. And I'm guessing if you take the two of those, you're probably going to be able to bring that together with the spot. But the point here is that if you just wanted to hold an ETF such as IBIT, such as Fidelity, your performance would mostly mirror that of Bitcoin. So that for the remainder of today's analysis, I'm just going to be saying it's basically the same thing. Okay, you're looking at roughly the 143% return and asking, do these other assets outperform? Well, let's answer that question. The first one we're going to be looking at today is MicroStrategy. And MicroStrategy has a very interesting story. In fact, personally, I actually worked with their software years ago when I was working at banks. They were known as some of the analytics, business intelligence analytics software. So that was my introduction to them. When I started going to Bitcoin, it was a little bit of a surprise for me, but I think maybe it was a surprise for the entire market. So as I said, they've been around since about 1989. They've been a software company since that time, doing business intelligence and analytics software for industries such as banking, kind of a niche area. And then in August of 2020, they started a brand new strategy. And the strategy is to accumulate Bitcoin. It's to sell debt, to accumulate Bitcoin and add that to the balance sheet. And that plays into exactly how they're being kind of traded and a lot of the discussion that's happening about them. I'll talk about some of those risks in a moment. But they are really interesting in the fact that they're the only company, as far as I'm aware, globally, that's taken this strategy. And because of that, they now own, I believe it's about 1% of the Bitcoin supply. And they have a very unique debt model as it is that's moving them into, they're in an industry of one. Which is just kind of interesting. But then the question is, well, have they outperformed Bitcoin more or less? And MSTR is the actual ticker, but the company's MicroStrategy. Okay, well, if we look over the full year, MicroStrategy has delivered about a 4x versus just holding spot Bitcoins over the period, the November 11th, 2023 through November 11th, 2024. And if you actually look at there's a couple of details here that I find kind of interesting. So the first period that we look at here, we've mentioned Bitcoin went up about 100%. And during that period, MicroStrategy went up about 300%. So this is at the end of 2023 going into 2024. Now we know that Bitcoin kind of topped out around the mid part of March and then did its consolidation period. Well, MicroStrategy did top out, you can see here on the chart, and went down. And then it actually topped out for this cycle just a little bit higher. And that's actually where I drew this kind of the topping out. And then it very quickly bottomed out. and it went down about 46%. Now, Bitcoin took a lot longer to actually reach its bottoms, which it did here really in August and September of that year. During that time, MicroStrategy held above its bottom. It only had one touch on the bottom during that whole time. So, my Bitcoin draws down around 26%, MicroStrategy around 46%. So it doesn't actually double the losses, even though it did about a 3x on the upside. Now, if we go to the latter part of the year, this final push, Bitcoin does, again, about 64%. MicroStrategy does over 200% during that time. So a substantial lead of holding MicroStrategy versus holding spot for even ETF Bitcoin, which may then lead you to say, well, shouldn't I just be putting all my money into MicroStrategy? It seems like a better play. Well, first you need to really think about the risks, and they're a little unique. So the first one is a little bit complex. And so just kind of bear with me on this one, because you need to understand at least the core concepts so you can understand how much this may impact the MicroStrategy price. So MicroStrategy is an interesting stock in that since they started the strategy in August of 2020, they've had an amazing amount of short interest around the stock. The short interest comes from investors or traders that think that it's overpriced based on the fundamentals, based on the strategy combination thereof, or perhaps they're even thinking that a risk like a recession is going to impact them and they're not going to be able to pay back their debts. Regardless, this has been a very shorted stock since the August 2020 when they started buying Bitcoin. And that short interest plays into the amount of volatility, right? Because the pricing, those short contracts happen on the options market. And as those buyers, because of the mechanics of the way that options market plays into the spot market, it can increase the volatility of a stock. So when we're thinking about the outsized returns, part of that could be coming from the actual short interest on the stock. And interestingly, the short interest is actually going down. So I noted here that the chart here just shows basically over the last year, from the end of December all the way through the end of October of this year, we can see that the short interest went from about 22% and it's now sitting at about 16%. So a substantial drop, and it's continuing to go down. That's the trend. And actually, when I looked at the historic data, their maximum amount of short interest was all the way back in November of 2022, when it was 47% of the shares outstanding were shorted. Now we're just down at 15%. The impact here is that if more and more traders get burned trying to short the stock, you may have less short interest in trying to play that trade. And that may actually lead to the volatility in MicroStrategy not being as wild and may not give as much upside. So that's just something to be aware of without having to know everything about the options market, without having to know everything about the exactly the percentage of short interest and how that impacts price in kind of a linear way. Now, it's not to say that this trend can't reverse. If MicroStrategy again goes into sort of a hyperbolic mode, maybe this goes up, and again, it could add more volatility, but it's something to be aware of. The next risk that you really need to be thinking about if you're going to be getting into MicroStrategy is the level of debt that they've taken on to purchase all this Bitcoin. So as I mentioned, prior to August of 2020, they were a traditional business doing software. Since that time, they've been issuing debt primarily to purchase Bitcoin, maybe some other business operations, but primarily to purchase Bitcoin. And this is a chart that came from their quarterly 2024 investor report. And it just highlights some of the debt that they've taken on to actually purchase Bitcoin, including the amount that was raised and the annual interest rate, and then their annualized interest expense. Now, I'm not going to go into the details of this. It's maybe something we could do in a later video. And I think there's some other videos online that may even do just a fantastic job. The point I want to raise here is that they do have a substantial amount of debt. And the risk here is that during a recession, when Bitcoin could be repriced down, their stock price could be repriced down, they may have to make good on some of the debt at the wrong time. That is always the risk when you've taken on this much leverage. On the other hand, as the price of Bitcoin continues to appreciate above the price that they purchased, as well as the interest rate and the annual interest expense, it becomes a lower risk. And right now, as Bitcoin has continued to rally higher, and definitely during the bull market, this risk seems relatively low, but it's something to be aware of. And the last point I want to bring up around them from a risk-based perspective is that the market doesn't understand their business model. The market doesn't really agree on the valuation metrics. So one story is that MicroStrategy should be valued based on the amount of Bitcoin that they hold on their balance sheet, what many people would call the net asset value, or the value that they're holding on their balance sheet. And What you have here is a tweet from an influencer on Twitter noting that MicroStrategy is really trading at 3 times the amount of Bitcoin that they own on their balance sheet, right? Down here is about 1. They're trading at about a 3. That would imply that there's all of this exuberance going into the stock price and that they should be dropping by about 2/3 from the stock of the price to match the amount of value that they have on their balance sheet. So that's one way of valuing the stock. But in the process of preparing this report and this video, I did a little bit more research and I came across this really interesting article that was published on Seeking Alpha that did a comparison of MicroStrategy, not based on what they held on their balance sheet as assets valued, but really looking them more as what they're calling an investment bank. And I'll link to the article because I think it did a really interesting job. Basically broke down what are the functions of an investment bank, what is MicroStrategy doing, how does that compare to those functions, and then how would you value its revenue and cost as a investment bank, and then how does that finally lead into what you call the price per earnings ratio. Okay, and that's how you allows you to compare MicroStrategy as an investment bank to these other types of investment banks like a Goldman Sachs or a JP Morgan. And what the analysis found was that if you look at the price to earnings ratio as an investment bank, then it actually has a reasonable price relative to those other investment banks. So you have Goldman Sachs and JP Morgan trading at 15 to 16 price earning ratios over the trailing 12 months. MicroStrategy is sitting at a 14. Okay, so maybe you don't understand everything about a PE ratio and you're not looking into exactly how to recategorize assets on a balance sheet and understanding how to look at cost expense. The point that I want to raise here is that when the market doesn't know how to price a stock or an equity, and there's debates about it, it can be both, it's a double-edged sword. If the market comes to an agreement at some point later in time, when the majority of the market investors agree that its net asset value is the right way to value it, and all of a sudden you could see a repricing in the stock regardless of anything that's changed in their business. On the other hand, if there's enough people in the market that say, no, actually, we think there's other value in MicroStrategy based on their operations and how they function specific to Bitcoin, then you could see them continue to grow and be an outpriced kind of stock. So it's really difficult to say. We don't really have a clear lens at that, but it is a risk. So how do you think about Bitcoin spot versus MicroStrategy? Well, the historic returns over the last 12 months, definitely fantastic returns, again, just holding Bitcoin. But as I mentioned, the risks are fairly significant. You've got declining short interest, which may limit the price premium. You've got this leverage play that could be impacted by a recession. You got a possibility that the market starts to reprice MicroStrategy lower based on how they want to value the stock. You've got regulatory action that could come in because, again, MicroStrategy is a business, not a bank. If they're operating, doing banking functions, are they going to receive some kind of negative impact from a regulatory perspective? I'd say that's low, but it's not impossible. But actually the risk, the last one that I want to mention here, which I think is the biggest risk, is this key man risk. Can anyone tell me that they can imagine MicroStrategy without Michael Saylor? If anything happens to Michael Saylor, there's going to be a price impact on MicroStrategy, and it has nothing to do with any change in their operations. So you better hope that Michael Saylor doesn't have any problems going forward. Now, what about effort? What about holding this? Well, it's one stock. It's easy to track. You can listen to their quarterly reports. You can read their 10K. You can get as much information as you want because it's all in one stock. From that perspective, it's relatively easy. And I think for most people, if you look at this, it's similar to Bitcoin. It's probably more of a buy and hold rather than trading in and out of. So from a trade perspective, it's a relatively low lift. So you've got pretty good returns. You've got a significant amount of risk that can be mitigated. I don't want to say that it can't. And then from an effort perspective, I'd say that's pretty low. But let's move on to the next set of investment class, which are the Bitcoin miners. So for those who are unfamiliar, the Bitcoin miners are they're companies publicly traded that operate the Bitcoin mining facilities that actually do the mining that gives you the Bitcoin every 10 minutes. And historically, Bitcoin had individual miners. They were coming in and actually mining the Bitcoin, personal computers. Over time, that's kind of scaled up to where now you have these ASIC miners, which are pieces of hardware that are specific to just mining the Bitcoin algorithm. They're very expensive to buy. They're very expensive to operate from an energy perspective and housing perspective. And these companies have specialized in figuring out where to source energy at a lower cost where to then purchase their mining rigs, install them, operate them at a low cost, and then be able to turn that over as they have to retire those units. Lastly, I would say all of these have to engage in a significant amount of finance because this is a very resource expensive type of industry. Okay. And there's a lot more there that you could talk about. I'm not intending to get into all of that again. That could be another video, but that's sort of what you're buying if you're buying into a mining stock. So how did they perform? How did the Bitcoin miners perform over this November 11th to November 11th, 2023 to 2024? Well, many of them did well. You had TeraWulf, Core Scientific, ClearSpark, and Iron, all of which outperformed Bitcoin by at least a 2x. TeraWulf being the best, doing about a 5.5x relative to just holding Bitcoin. Now, the other miners, no, not as much. BTDR, Mara, Cypher, and BitF outperformed Bitcoin, but by a much smaller margin. BTDR did 200% what Bitcoin did, that 143%. And then you have HUT, BitF, and Riot that actually underperformed Bitcoin. So when you think about just holding a miner and someone says just buy some miner for some of that beta play, you really have a broad spectrum of who's outperforming and underperforming. And actually only 4 of these really gave you a 2x multiple, with TeraWulf being by far the leader. And when I broke down these miners and looked at them across those 3 periods, that first run up by Bitcoin, then the consolidation period, and then the final run up, you see that the winners really do change by each of the periods. The first period, ClearSpark was a clear winner. It really outperformed, kind of looked a little bit more like MicroStrategy in its performance at 312% versus Bitcoin's 105%. And then during the consolidation period, where Bitcoin was actually down 26%, 2 miners, Core Scientific and Wolf, were actually up. I mean, that definitely would have been the time to hold those. Then we get into this last period where Bitcoin has continued to rally, and we see new miners doing well. We see Cypher, and we see HUT, again see Wolf, and now we see Riot coming back at 134%. And then, of course, on the R12, which I just went over, you see a lot of divergence on who's actually outperformed. I just kind of walked through those. So when you think about the Bitcoin miners, they outperformed MicroStrategy. At least TeraWulf did at 773% return. So it's even better than MicroStrategy. But what about the risk here and the effort? Because I think that's what's kind of being underplayed here. Well, as I mentioned, it's a very specific industry where these people operate. Typically, when I've looked at their balance sheets, they have a lot of debt. Their profitability doesn't look great on a quarter-by-quarter basis. So their balance sheet doesn't look great. Their income statements don't look great. And a lot of it's based on the promise of the amount of Bitcoin that they hold. So, that could be impacted if the market starts to really price them against their fundamentals versus sort of the speculation on how the Bitcoin on their balance sheet is going to do. And of course, if they hold a lot of debt, they could be subject to adverse changes in the interest rate environment. Something that we've already seen a lot this year is around political pressure, where communities have said we don't want these miners in our community because we consider it a negative for the environment. It does appear that may be letting off, but that could potentially have some impact on their performance. And then the last one I'd say here goes back to sort of that valuation point. Certainly in a bull market, you could expect these to do rather well, generally speaking. But of course, we already saw some that didn't perform quite as well. And then, but we don't know how they're being valued versus their fundamentals versus the Bitcoin. So it's definitely, in my mind, a risk that are they going to continue to outperform, especially if that debt is coming due this year or 2025. And so the last part that I think most people need to ask themselves, how much effort do I want to put into this? Contrast this with MicroStrategy. MicroStrategy, it's a single company. You can read the 10K, you can read their press releases, you can read about them, you can go deep on one stock. Here, you really need to understand how the mining industry works. What are the core metrics that are actually driving performance? Typically, it's things like what's the cost per unit to actually produce the Bitcoin, the amount of energy that they're having to spend, the price per Bitcoin, or price per sat. It's where they have long-term arrangements for that energy cost. And it can be also the cost of debt, the cost of capital that they're incurring to finance operations. That takes a lot of time to be able to do that analysis. And then the last part I would say here is, if you do that analysis, you feel comfortable, it's a little bit easier. You're probably not necessarily needing to trade in and out of the miners. You can do more of a buy and hold strategy if you're confident that they're going to outperform. Although, as I said before, and what the data shows, they have outperformed over different time frames, which could be a problem if you're trying to maximize your amount, your return. Okay, so the next one we have here is the MicroStrategy 2x long. And so the reason I'm including this is that even though it's a very speculative play, it's one that you're going to read about, you're going to hear about, and it could be kind of an interesting play for some people, but and I'll get to it in a moment. It's very, very speculative, and it's a lot of time and effort to manage. So the MSTU is an ETF fund that seeks to deliver 2 times the performance of MicroStrategy on a daily basis. So it's really intended to be more of a daily trade vehicle rather than a buy and hold. And it does this by holding a certain amount of MicroStrategy and then using options and derivative contracts to try and create that 2x performance. So there's no guarantee it will do that, but certainly that's what they're intending to do. So the question then becomes, well, how have they performed? Have they outperformed MicroStrategy? How have they compared against Bitcoin? We already know that MicroStrategy over the time frame, for the most part, outperformed. So the MSTU fund actually launched in September 19th, 2024. So I've updated the chart here. And then when you look at the performance, it obviously overperformed MicroStrategy and it overperformed Bitcoin, as you would expect. So it did about 350% to MicroStrategy's 134% over that time frame, which is about a 2.6x. Then, of course, over Bitcoin, it did about 3.15x over that time frame. And when you ask yourself, well, does it go up and go down by the same amount? Well, it did about 2.6x over that full time frame for the period analyzed. But then if I go to the actual drawdown, there's about a 26% drawdown versus MicroStrategy's 13.79%. So it basically did a 2x drawdown during the period. So it's essentially performing as expected. So you may say, okay, great, I can get double the returns of MicroStrategy. Maybe this is a really good play for me. Well, you need to realize that from a risk perspective, yes, it can double the amount of MicroStrategy returns, but you inherit all of the risks from MicroStrategy, which we reviewed a few minutes ago. And on top of that, you have an outstanding question of how are they able to manage this 2x peg with the cost of the options market. I mentioned that the short interest is starting to decline or has continued to decline since 2022 for MicroStrategy. It's possible that the options could change in pricing, availability, volume, and all that could impact the ability for them to be able to deliver on that 2x. So that also then gets into this next part, which is just about effort. In my opinion, and this is not financial advice, none of this is really something you have to sit down at the desk and manage. This is not something you just buy and hold. I could be very wrong about that, how that actually performs, but in my view, this is very much something that experienced traders are going to be using to try and juice out more gains. And of course, when you try and juice out more gains, you're increasing the risk that you have steeper losses. So it's something to really understand from a risk-reward perspective. Okay, so we're about to look at some of the summary, and then we're going to get into the last set of assets, which can have really high risk, high reward returns that I want you to be aware of. But we just need a gentle reminder, the past does not equal the future. All the analysis that we've just done does not guarantee that you're going to have outsized returns for any of these. Certainly, if some of the risk materialize, it's possible that the returns go down. And it also doesn't say that the performance couldn't be better if we have a banana zone type of environment. But something to kind of realize when we're doing the analysis. So the question I want to ask here is, what should I have held during these different periods? And I found the outcome to be different from what I expected, right? So we know spot Bitcoin or relatively the ETF, we've got our baseline for how that did over those 3 different periods, resulting in about 143% return. But if I compare MicroStrategy, MSTU, and take the leading miner, which I know is very selective, basically for 3 out of the 4 periods, miners, which were ClearSpark, Core Scientific, and Wolf, were by far the best performers. And then from the last period, the 2x leverage play was the best performer. So clearly, if you could just have chosen those, you would have outperformed everybody by a wide margin. But of course, we know that that isn't the only thing you need to consider. All the risks that I talked about need to play into that, into your calculation of whether or not these are worth holding, as well as the amount of effort you want to put into holding these. Just because the miners have done well, it would have been difficult to know that going into it. We've talked about TerraWolf on the Trading Pit many times in our previous show or previous podcast episodes, but it's possible it had underperformed. Clearly here it did well, and I'm glad maybe some of the people that listened to those episodes over a year ago did perform well, and I'm happy for them. So is this it? Is this the last set of ways in which you can buy Bitcoin? I talked about 5. There's just 4 on the board. Well, no, there's a new one, and it's the Bitcoin assets. Now, the Bitcoin assets are new. These are all really, really new assets. They've been around maybe 12 months, 14 months. And they describe various items that exist on the Bitcoin blockchain that are priced in Satoshis, and they include what we're calling rare sats, ordinals, and meme coins. Okay? So what does that actually mean from a practical perspective? Collections are really NFTs on Bitcoin. And again, they're priced in Satoshi, and there's some benefits there. But this is the same kind of collections that if you've traded collections and NFTs on Solana or on Ethereum, this would be very similar, but it's on Bitcoin. And there is a unique feature on Bitcoin in that all the information is actually inscribed in the blockchain. There is no external chain or external data source where it's actually inscribed. Some people believe that could actually help with pricing. Then you've got the meme coins. And meme coins here are also a little bit different. So you've got kind of a meme coin standard on Solana and Ethereum. Here, the meme coins, there's a couple different ways in which they've been developed and deployed. The biggest one right now is what's called ruins. And we're going to show some of the performance there for those coins. But there's the BRC20, which is another type of meme coin. And then you've also got meme coins on Bitcoin L2, such as Stacks, which allows you to take Bitcoin, what they call wrap it, so you put it in a custodial relationship, and then trade on the Stacks ecosystem. There's also meme coins there. For the purpose of today, we're just going to be looking at ruins because it is by far the largest of the three areas right now. And in fact, as of this recording, I think one of the ruins tokens, DOG, had surpassed Ordinal or ORD, which is one of the largest BRC20 tokens in value. So I think that's where most of the attention is if you're going to be looking at this asset class. And lastly, we have what's called rare sats. Rare sats are collectibles at the Satoshi level where people want to buy specific Satoshis with specific numbers. We're not going to spend a whole lot of time on there because frankly, the market appears to have completely dried up, but I want you to be aware that it's there. But these are three different assets that you can buy on the Bitcoin blockchain. And if you're asking why I would actually buy these, realize that being priced in Satoshis means that even if these stay flat and Bitcoin goes up in dollar terms, you've actually made money, right? Or in terms of dollars, you've actually increased. Now, you haven't increased the Satoshis unless these actually go up in Satoshis. But it is a way in which you can really get sort of a double hook or a double dip into this environment. It's also extremely risky because they are net new. The valuation metrics aren't there. These aren't equities. It's kind of similar to being able to price these on other chains, which presents a problem by itself. So let's actually look at their performance. So the first one is what they're called collections, which are really on Bitcoin, we call them ordinals. And certainly, if I just did a selection here, there's a lot of different ordinal projects. These are some of the largest ones that come up. You have Node Monks, Bitcoin Puppets, Bitcoin Wizards, and Quantum Cats. If you're on X, you'll see that these get a lot of attention from a lot of communities, but certainly they're not the only ones. But when I looked at the price performance of these, really what you found is that most of these projects started off, had a huge run up at the very beginning that led to this initial return. And then since that time, they've fallen flat and have stayed flat since that time. So if you've got April 24th for the Node Monks, you see, if you look at the price chart, you see a run up and then it kind of peaks and then it's fallen flat. It's kind of settled at the current price floor that I was looking at this. And this is November 16th, 2024. And similar for Bitcoin Puppets, the Wizards, and the Quantum Cats. All of them have returned a really good price. And you'll notice that these are actually in Satoshis, not in dollars. So if Bitcoin went up double during that time and your Satoshis went up 6,600%, you've made a massive outsized return. Okay, this is by far the best play of any of the ones we've looked at to date. But if I compare that, if I bought at the height of the cycle, I'm certainly down across all of these assets right now. And there's a lot of debate of whether or not these will continue to see a price run in this market. The theory from a lot of people that are believers in this believe that as Bitcoin continues to accelerate during the bull market, there's going to be interest in buying other assets that can go up. Assets like ordinals, just like you saw in Ethereum, are one of the best plays. But they're not the only play, right? We have what we were calling the Bitcoin meme coins. Now, these are 4 ruined projects. And the ruined projects just dropped, I believe, in April or May of 2024. So they're all relatively recent. And what you find for them is kind of a similar story when you actually look at their performance. So from when they started and what I've done here, and that's what I'm showing here, you got Doggo the Moon, Pups, Gizmo, and $1 Billion Cat. These are certainly not the only ones. This is very selective. I've just chosen some ones that at the time of analysis were fairly large in terms of market cap and attention, as well as give me some price performance to look at. I believe Dog to the Moon, as of this recording, continues to be the largest by market cap. Pups is certainly up there. $1 billion cat, I think, is maybe 100 million, and then Gizmo is maybe even half of that. So they're relatively small relative to other Bitcoins and other ecosystems. But if I look at their price percentage change, they dropped substantially. At least Dog to the Moon and Pups did, and then the high was relatively muted, in my opinion. 144% from the price start, 40% up for Pups, World Peace, and then Gizmo and $1 Billion Cat have done very well, right? From a percentage change perspective, those were obviously the plays. Of course, you have to realize when you're buying memes, it's a very different analytical framework, right? How you think about fundamentals for memes is very different. There's some people that seem to have an innate ability to choose memes. I would argue that they probably have some inside views on what is culture and how they actually play specific tokens. And that actually gets into the challenge of actually selecting these. It's very easy to say, look, I bought a Rune meme coin and it just went to the moon, without even taking into consideration something that may be interesting to you may not actually make a lot of sense to the market, and vice versa. So selecting these can be very difficult. That said, clearly the people that bought into these memes over the time frame I have here did rather well. And again, this ends around November 16th of 2024. It clearly have done well, and it shows that you can have pretty good price appreciation. What could be the narrative here? Well, similar to the ordinals, a lot of people that have bought into these coins point out the fact that the amount of Bitcoin, or the amount of, I would say, Satoshis allocated to meme coins on the Bitcoin network is a fraction of the meme coin size on both Ethereum and Solana. So to give you some perspective, 7%, these are rough numbers, 6 to 7% of activity on Ethereum and Solana relate to meme coins. Here, it's about 0.5%. So you've got a substantial amount. If these are able to catch fire, they could grow and catch up to be 6-7% of those other chains. It'd be about $123 billion, whereas right now it's about it's 1.5 billion. So there's a lot of room for this to potentially grow, maybe 100x, if it actually does catch fire, which is a big if. Lastly, from an asset perspective, you've got what I call rare sats. You can see here they've got these what they're calling collections, right? And I mentioned that there's various attributes for these collections that give people interested in the actual sat and wanting to buy a specific Satoshi. Things like vintage being very, very old Satoshis, being in certain blocks, palindromes being the numbers of the Satoshi, being 111, 1111, right? All one number. And there's a couple of other categorizations. You'll notice that this is all blank, floor, sales, pending listed. This was for a 30-day view that I took off of Magic Eden. You can see there's no activity. So I think at this point, it's fair to say that there isn't a lot of interest in rare Satoshis. Now, can that change? It might. But if I think about the full risk profile of comparing ordinals and artwork and what that's done on other blockchains, and when I look at from a meme coin perspective, this is by far, in my opinion, the riskiest of the riskiest. And you really don't have a great view into how big the returns have been. What I would say here is that it's possible that this could come back. It's possible that this could be a fantastic place. But again, you have to get a really deep-seated idea for how does the community think about specific Satoshis. All right. So now we got to get into the last question, really, which is, how do I think about allocating for these? How do I buy into these? What's the risk, reward, and the effort? And we're going to go through 3 slides. This one has graphical representation. Then we've got one that actually does more of a qualitative. And then last, I'm going to talk about the actual allocation for all of these. So remember, holding Bitcoin relative to other equities already means that you're getting higher returns. If you got 143% return on Bitcoin over a rolling 12 period, and maybe it's able to double that from here, you're still outperforming most likely most equities outside of maybe NVIDIA. So you're already getting a return. All the returns here from a return perspective is really comparing against that. So the last point I would point out here before I actually walk through this kind of visual is that the green represents the amount of effort, orange is a medium to higher effort, and red is the most amount of effort, what I put on here, because the effort level is not all the same regardless of the risk reward. Spot Bitcoin is by far the lowest effort. You buy it, you can hold it. An electronic wallet, a digital wallet, you can hold it on an exchange, and it's not the same risk that it was way back in the day. Or you can even hold it as an ETF. MicroStrategy is kind of the same way in terms of effort. Yes, it's a little bit more than Spot Bitcoin because you have to study up on the on the actual company and make sure that there's not fundamental changes happening. And maybe you want to be aware if something's happened to Michael Saylor. But for the most part, it's one stock. You can easily kind of study that. And certainly it offers a higher return than spot Bitcoin. We already noted that. But it's definitely a riskier than spot Bitcoin for the reasons that we noted. Now, from a returns perspective, Bitcoin miners, as we noted, are even higher than the MicroStrategy if you choose the right ones. This is looking at them collectively. So you have to be able to figure out the right miner of all of them. And that means that there's more effort. That's why this is orange and not green. It takes more effort to be able to study that sector, understand what may happen to it from an overall industry perspective, and then choose the leaders of the pack there. But certainly the return is higher. And I would say that the risk profile is maybe similar to MicroStrategy, but the fact that they have a lot of debt and it's a very intensive industry and profitability can be impacted, I would say it's actually a little bit higher than MicroStrategy, which is already risky. Then you've got MSTU, which as a leverage play is obviously way higher on the risk scale and obviously did better than Bitcoin miners and MicroStrategy, but it's also going to create a lot more effort to sort of manage that position, to understand if they're going to be able to manage that trade, but also you don't know what's going to happen with the options market, how that could impact that pricing. So I consider that very, very risky, but not as risky as Bitcoin assets. Bitcoin assets are by far the riskiest, and I think they also give you the highest returns. And I'll talk about what I think those returns could be, but it's substantially higher than these other ones, but with all of that added risk. If I look at MicroStrategy, its chance of going to zero is low. With the Bitcoin miners, they wouldn't go to zero. They go to the value of the Bitcoin on their book. MSTU potentially go to zero, but probably go down to the value of the MicroStrategy they're holding in the fund. Bitcoin assets can in fact go to zero, just like any meme coin or any art project. So you really need to be aware of that. But what's the best approach for you? How do you think about this? In my mind, you can look at the return, you've got to look at the risk profile, and you've got to think about the time investment, which is what exactly I showed on that on the last graphic, is to really do an evaluation of what do you want to hold, how much effort do you want to put into it, and how much of an allocation do you want to do? Because certainly, you can get a lot more MicroStrategy 1 to 5x through Bitcoin. The risk is, I would say, relatively low, but it's not low. Or maybe I should have actually said it's a little bit higher. Maybe it's low to medium, but your time investment is also low. If you're looking to get some kind of allocation, maybe you say, I'm going to put some into MicroStrategy and then keep most of it in spot Bitcoin. That's very different from MSTU and Bitcoin miners. And then Bitcoin assets, I think this number, I'm putting this as a conservative. I think if this does blow up, it goes substantially higher. Maybe it's 100x. But you're going to have to do a lot of research to understand what are the communities that are actually going to push these assets forward. You're going to have to do a lot of time to do a lot of that research. A lot of people aren't interested in that. So what might an allocation look like? Does it have to be one or all? Well, clearly it doesn't. You could just buy Bitcoin. That's one strategy, right? Then maybe you want to do something like this, which I just said, right? You have a Bitcoin spot ETF. You're doing 60%. The rest of it's a MicroStrategy, right? And the percentages could be different. You could do 75-25. You get a little bit of that beta. You take a little bit less risk. It's just going to juice some of those profits. My point is you could definitely do a different kind of evaluation here. And that's something we could do in a later video, is trying to get more of a mathematical model. These are just sort of representative views that you could add. But certainly we could. That's a way in which you could buy and hold without all the effort that would be needed for having to manage that trade. Then you've got sort of an active trader. If you're an active trader, someone that's going to continuously be researching, you're at your trading terminal all the time. Maybe you're even going to be looking at Bitcoin options, which we didn't talk about today. But MSTU and Bitcoin miners, maybe this actually is a good play for you. We just noted those had the best returns. And if you want to do the fundamental analysis, add that with technical analysis and view, you could really juice those trades. You just had to be sitting at the desk all the time and managing that position. But maybe that's not you either. Maybe you don't want to be a TradFi guy. You don't want brokerage. You're all about crypto. Well, if you're all about crypto and you really want Bitcoin, you're most likely just going to be holding spot Bitcoin with some amount of Bitcoin assets, maybe 10%, maybe 20%, not a huge amount of your portfolio. And it doesn't have to be a lot. I mean, here I have 90-10. It could go down lower than that. Maybe it's 95% into Bitcoin and 5% going into those high speculative plays. And that can give you just a deeper sense of you can get some of that real upside if any one of those explodes. But the downside, if they all go to zero, you're not hurting, especially if your Bitcoin is going up. I will say, and I just want to reiterate, if you choose the right projects that at least are able to maintain some value over the bull run, then as Bitcoin goes up, the value of those positions either stays stable or it actually increases if they increase the value in Satoshis. So Maybe you're wondering now, well, what's my approach? How am I actually looking? How is Marconi investing in this? Well, to be honest, I'm not doing the active trading. I think the amount of effort that has to be done for MSTU and Bitcoin miners is beyond the amount of effort that I want to do. And I know we've talked about some great miners on the show. I'd be looking for some of their kind of input into this. From a MicroStrategy perspective, I'm doing some allocation to them, mostly because I have traditional brokerage as well as native Bitcoin. And so I actually do hold some of them in a portfolio. I'm not going to say that it's 40%. In fact, it's less than that. And part of that is just because I'm mostly concerned with the valuation frameworks for this and the fact that it can run really hot and have a lot of deep drawdowns. And I'm okay just getting the returns of spot. And then from a Bitcoin assets perspective, yes, I am holding Bitcoin assets. It's much less than 10%, but I have invested time and money to learn about those projects, both on the meme coin side as well as on the ordinal side. I think that those are fantastic places to get some of that beta exposure to Bitcoin in Satoshis. And I think that there is merit in how far that this could go. I haven't done the actual framework to look at kind of expected values. That's something I could do in a later video if you guys are interested in that. But that gives you some flavor from my approach to this. Not doing actively trading, definitely getting some beta exposure through MicroStrategy and Bitcoin assets. And then from a Bitcoin perspective, really looking to sort of buy and hold. So that takes us through all the information prepared for this. I hope that you got something out of this in terms of thinking about how these different approaches can be looked at from a risk-reward perspective and how you can think about that for your own portfolio. I know it did for me. When I put the numbers on the paper, I really realized how much better some of these have performed. And when we say they're beta plays, really putting some numbers around that gave me some perspective, as well as thinking more about the risks, not just blindly buying into any one of these assets. But let us know in the comments what you think. If you think there's other ways in which getting exposure to Bitcoin makes sense, maybe giving some perspective on the risks for any one of these assets. And what else do you think would be valuable to go into? Would it be more valuable to go into MicroStrategy? If you're interested in getting a little bit more into the miners, or maybe more on the Bitcoin assets? Let us know in the comments. And if you haven't already, definitely hit a like and subscribe, and subscribe to the channel. We'd love to hear from you, and I'd love for you to be with us along this journey. All right, this is Marconi White, signing off.